Why do index funds and ETFs reign supreme over mutual funds on average? It's because of two things, the fees and the performance. Let's look at the fees first. And whenever I'm talking about the fees, I'm specifically talking about the expense ratio. Now, the expense ratio can cover a multitude of fees. Fees such as administrative fees, operating costs, commissions, advertising. These are fees that you will have to pay as an investor. On average, a mutual fund has a much higher fee and expense ratio than an index fund or an ETF that you're investing in. Mutual funds are actively managed by the fund manager, which means that the fund manager does all the research, the buying, and the selling of all the securities in that specific fund, and all the fees associated with the buying, selling, administrative costs, etc., even paying the fund manager's bonus, that's all being paid by you. Now, with a index fund or an ETF, those usually track a underlying asset. So for example, if you're investing in an index fund that tracks all the companies in the S&P 500, the fee is going to be a lot lower because all that fund does is mirror all the companies in the S&P 500. When you look at a mutual fund, you could easily see fees in the 1% or even higher. But when it comes to index funds, you can see fees that are 0.1% or even lower. And yes, even if a fund performs well, your fund went up 8% in a year, 10%, you would still have to take into account your expense ratio fees into your capital gain. And the second one, performance. Now, it has been noticed that mutual funds in the short term are able to outperform index funds and ETFs. But it's also been noticed that in the long term, index funds and ETFs that are being used as the benchmark, so for example, an index fund that mirrors the S&P 500, over the long term, those have widely outperformed mutual funds. And then even if you look at the mutual fund, tack on that expensive expense ratio also.